Hey, welcome, guys. It is Monday night, July 28th, in preparation for Tuesday, July 29th. FOMC meeting begins tomorrow. So we finished up that last Schwager book, the interview with top traders, Market Wizards book, um, and wanted to go into another one here. This is a little interesting. So it's going to start off with like a 19-page interview here first. Then it starts into Roy Longstreet's book, The Viewpoints of a Commodity Trader. It's just bear with me on this one. There is a lot, and I can't overemphasize that, of gold in this. But I'm going to go through the interview so you kind of get a little bit of a backstory of this guy's character. Obviously, some of the backstory is not going to be, trading related specifically, but it kind of gives you an idea of who this guy is, where he's coming from, and what he was able to accomplish. So let's get on with that, and then we'll jump into the analysis after that of the markets today. So, all right, so let's start with viewpoints of a commodity trader. This was I recently posted some questions of the on the now deceased trader Roy Longstreet. He was 84 years old when he gave this interview in 1985 to Intermarket magazines. From time to time, we wonder what it is like trading futures before the tremendous volatility found in the agricultural markets crept over into the financial markets. Prior to T-bonds and stock indexes, future markets flourished, but were not the stuff of the world's financial executives as they are today. This month's intermarket interview probes the memory of Roy Longstreet, an individual once considered as a major market force who lived and traded through the financial upheavals of the Great Depression, as well as the financial futures proliferation seen in the last decade. Roy Longstreet today is an 84-year-old resident of St. Louis. Far from retirement, Longstreet remains as an active trader, a speculator whose only concession to time is the size of the position he takes. The author of a book on trading, Longstreet left South Dakota farm as a teenager on the eve of World War I, graduated from Iowa State University, and received an MBA from the University of Chicago. His work as a hedger, first for Swift and Company in 1927, and then for Ralston Purina, led him to trade his own account. He is considered by many analysts one of the foremost developers of a modern fundamental research approach to the markets. Intermarket magazine says, "Why have you succeeded in trading to such a degree, and why do most traders fail?" Longstreet says, "Many major problems people have in trading are caused by their expectations of where the market is heading, how much money they will make from this trade, etc. One thing I have learned that has helped me: it is wrong for a person to enter into any market with any preconceived expectations." Uh, Intermarket magazines, or I'll just say IM because that's how they abbreviate it here, but it's Intermarket magazines doing the interview. IM says, "When you trade, don't you at some level need to have expectations?" Longstreet says, "No. I think that is one of the big misunderstandings that people have in this business. People should substitute Thanksgiving for expectations. Having expectations simply interferes. It interferes with our soul growth. So you never approach the market with expectations," says IM. Longstreet says, "I do and I don't. In becoming successful, I change my thinking. I concentrate on possibilities rather than probabilities." Let me jump back to one thing that it kind of ran through here. So he said, interfering, people should substitute Thanksgiving for expectations. So be thankful for whatever you're given, not the expectations. I want to say he touches on that later in either the interview or in the book here, but that one jumped out to me. Um, he said, "I concentrate on possibilities rather than probabilities. I've reached the point where I disagree with nature. Nature wants you to know where your limits are. The first thing that I do when I examine a new subject, a new commodity, or a new thought about an old commodity is to try and place limits on how far it can go for me to, or against me. I do that purposely, and yet that's in conflict with the idea of not fostering any expectations." IM says, "So you approach the markets as a pessimist?" No, not as a pessimist, but as one who is willing to accept anything that happens and be thankful for it. IM says, so if you buy the market today, you'll be able to accept that it's down tomorrow. That's right, says Longstreet. IM says, how do you handle the situation when what you don't want to have happen does occur? Longstreet says, I know that there's always a possibility that what I don't want to happen will happen. The market will not act in accord with my expectations. You have to ask the question, though, how must you function in order to survive? The answer is to be able to accept a loss. Not having expectations make it a little easier to accept a loss. You must realize that that losing is part of the soul's growth, so to speak. It's necessary. It's hard to accept, but it's necessary. IM says, if taking a loss helps develop the soul's growth, as you put it, what does taking a profit do? Longstreet says, taking a profit can be just as injurious to your financial situation as taking a loss. It can be even more harmful than taking a loss. It can give you overconfidence. Taking a profit can lead you to believe that you know more than you really do. Every man is in that position. It's human nature. How old are you? Asked IM. 84. I was born in 1901. How did you start out in the business? I am from an agricultural community. My father was a farmer and a laborer. He came here from Holland. He was a laborer all of his life, working for someone else. A part of his laboring experience was in farming, but that isn't what prompted me to take up trading. IM says, did you, at a young age, become a laborer as well? Longstreet says, no, I never did. I left home when I was 14 years old. IM says, how did you support yourself? Well, to give you an example, when I left my home, a farm in South Dakota, I went to a high school about 35 miles away in Sioux Falls. I approached the principal and described to him my predicament. He said, well, if you sweep the floors here, I'll provide room in my office to sleep. The teachers in the domestic science always left a little food at the end of her class so that I had a little bit to eat. She knew the predicament I was in, that I was destitute. Keep in mind, this is back in Great Depression days when a lot of kids were having to leave home because parents didn't have enough money to feed all their kids. Luckily, this did not keep up for too long. The athletic coach, who already had a family of 5 children, took pity on me and took me into his home. The football coach? Asked IM. Yes. He took pity on you because you were so good in sports? Longstreet said, at the time he took me into his home, I had yet to demonstrate any ability on the field. Subsequently, I did. When I went into his home, I stopped sweeping floors. I got a job at the public park. It paid me a very small sum of money by the hour. Anyway, he fed me, provided me a place in his home to sleep. He never supplied me with any money. Actually, he did give me $5 when I graduated, and the next morning, he told me that I had to make a living and find another place to stay. I moved out and continued to work cutting grass, but I knew I wanted to go to college and had the impression that YMCA could help me find employment while I went to college. So I wrote to the YMCA in Ames, Iowa, and told them of my predicament. They wrote back saying, you will need at least a minimum of $300 to go to university. And if you don't already have it, then don't come. But I went to Ames anyway. And the first place I went was to the YMCA office and said, here I am. The person there said, we told you not to come. I said, I know, but I'm here. That told me they couldn't help me. That told me they couldn't help me. And that was the end of it. So I went to the athletic director. By that time, I was 17 years old and had some size. I played tackle on the high school football team. The athletic director looked me over and said that he saw something that he was interested in, and I could possibly be a football player, which I already was. He took me down to the gymnasium and said, we have a room here for you. I'll arrange for you to wash dishes in the girls' dormitory. That way you can have some food. That's how I started my college career. IM says, I'm assuming not many people back then not many people back then knew they wanted to go to college, especially runaways. How did you know? Longstreet says, as a high school athlete, I became acquainted with people who had gone to college, and they encouraged me to go. IM says, to improve your quality of life? No, as I remember, after every football game, the referee, as much as anybody, encouraged me to attend college. He saw that I could play football. But I wanted to go to college for learning. My original reasons for leaving home was that I wanted an education. I did not know what an education really was, but just that I wanted it. All right, so I'm not going to belabor that this evening. I'm going to mark here where I'm at. Like I said, just bear with me on this book here. I think, like I said, I know for a fact you guys will enjoy it as we continue to get into this. But for now, let's jump in the markets. So today was a sell day, and that did play out. We came down, did not close below the 5 SMA. I believe my yellow line is my 5 SMA. The blue line is my 4 SMA. Yes, yellow is my 5, blue is my 4. We came down, bounced off basically the 4, and then end up going down a little bit lower before moving up into the close. So I have tomorrow as a potential additional sell day. We have the 2 period rate of change. We flipped down on Friday, even though we closed up, and then today was another continuation down. So we've had 2 down days on the 2 period rate of change. So tomorrow could be some back and fill, some thinking about it here, or it could be another flip up. As of right now, it's pushing down on the 2 period rate of change, but the price is coming back up for now. Also, I have that today was a negative PF3. It's noted by this pink circle underneath here. Negative PF3 is the slow line going down. I'm sorry, fast line, slow line, and what was the other one? Oh, and the 2 period rate of change going down there. So that did set up a negative PF3 day. Also, again, we have the 8th day close above that 5 SMA. In the past, as we've looked at historically here, we look at those extended runs. So we're on another extended run, wave 1, 2, 3, 4, where we came out of this consolidation. We're pushing on this wave 5 up here. So another close below the 5 SMA could or could not lead to another buy day. Further we get extended. The other thing I kind of marked in here. Now this is just old school charting analysis here. It's kind of the fan principle or three trend lines. So you start at the base here. This trend line here, it tagged it here. We tagged it. We broke it. Then we have the second one where we started here on the second one. We came up, kind of here on this here. We ended up breaking that a second time. Now we've made this third move up. In classic technical analysis, a break of this third fan or this third line could be a temporary reversal in the markets or a temporary, down in the markets. So that's what my dotted lines there kind of represent. It's a rough estimate of what I'm seeing on those lines, hitting kind of the bottom of these, these moves here. So we got the bottom here, one. I want to include as much price point as I can. We got the second one right here, and then on up. So, could we tag it again, move on up before we close below it? Absolutely. That is always a possibility. I'm also monitoring this 20-period moving average that we have down here. It's quickly approaching the top of this sideways consolidation area here. So as this 20-period moving average continues to creep up, sorry, I'll pull this down. I know some of your guys' screens. As the 20-period moving average continues to creep up, we're going to hit the top of that breakout point to see what happens there. Again, with tomorrow being the potential sell short day or a potential flip up, I say yes, we could have more or we may not. Okay, so 3 fan lines, I explained that. Still positive. So I want to keep this in mind. This LBR on the daily here, we're still on this positive. It's still, even with this little bit of move down, the sideways consolidation, it's crazy how this slow line has just maintained a positive, a positive picture on that. So we want to respect that and be aware of that still. All right, so the 65,000 tick, let me drag that over here. So on the 65,000, this is that price overlap that you saw here on the daily. I'm going to zoom in here on the 65,000. So we did have, and I think I mentioned this in last night's video, this Keltner channel reversal to see if that played out, which it did. We had this Keltner channel reversal. We closed down here. It closed below the one that was up outside of the upper Keltner channel. So far, our Keltner minimum objective has been reached by this retracement back to the moving average there. So want to be aware of that. All this is still on this. The divergences will eventually play out. It's just when, what day, what catalyst is going to say, oh, it was that catalyst, or it's the FOMC news or Trump tweet that caused the markets to fail. Or it could be that the market was telling us that we're about due for this. One of the two. But anyway, so we have this the slow line divergence as we've been making up. This morning gapped up on the Asia session with that new high on this bearish divergence there. All right, since a breakout. Oh, so this is the other thing on this. So since we broke out of the sideways consolidation, you see we've basically been riding this the Keltner channel up, kind of broke down a little bit below it, a little false breakdown back in, test the that breakout zone, and then we've been moving up, just riding this Keltner channel on the 6,500 tick. Well, today we dipped a little bit below it, and you can see we're right back above it. So we want to be aware of that. Pardon me. Also tomorrow with the FOMC beginning and then concluding on Wednesday afternoon, be aware. We just have some price overlap. We could have price movement, trending. Go back and reflect on your notes or any things that you've observed pre FOMC days, kind of what the market price action is. The internals, let's pull that back over here. So on the internals, we're not far, here's today's VIX. We're not far from those recent lows on the VIX. So we want to monitor that, see if we end up taking out those lows on the VIX, push down, which could lead to us pushing back up in the prices, or are we going to see the VIX start moving back up, which would bode for further downside for now. All right, that's it. That's all I've got for tonight, guys. Thank you for listening, and we will reconvene tomorrow. Happy trading, safe trading. It is a Tuesday, FOMC beginning of the meeting day.